Market's been going up really nicely as of late, and overall over the last 2 years we've seen really good gains. It makes it a little harder to find valuable companies that are discounted, that are set to go up in price over time. I may have found a nice idea in ProPetro, which is a company that provides services to oil companies that are looking to set up wells, especially in the Permian Basin, to do fracturing and extracting the oil that exists in that region. This company is a small cap. They're under $1 billion in market cap. And overall, the fundamentals look good. I'd like to go through and show you the fundamentals. I'm going to value the company and share with you what I plan to do with this small cap stock. The oil business has its ups and downs. And right now, oil is down. The oil price is down, which is a good time to buy because when oil prices rally, which they often do, companies that are in the oil complex go up in value. So it's not a bad time to take a look at it and buy into this little company. Let me take a closer look. ProPetro is a small cap at $843 million of market cap. Over the last year, their stock price has been coming down. It's probably because oil prices have been going down as well. I looked at oil prices and I looked at this stock price, and they seem to pretty much align with each other. I should say, follow each other. So, no big surprise. If you have our higher oil prices, the oil companies are going to want to extract more oil. Low oil prices are not really motivated. That totally makes sense. The company has revenue of $1.5 billion. They have a PE in the current year of 26 and forward PE of 26 as well. Analysts really like this stock. They think it's 45% discounted and they have a buy rating. When we look at their financials, even though oil has been going down recently, this company has been doing a good job in maintaining their revenue and actually growing it over the last 3 years. That shows that companies want to use ProPetro. They probably provide really good services. So all that's real positive in my mind. A company that grows their revenue shows that they have products and services the customers want. It shows that the business is strong and growing. Overall, their cash flow looks real good. The company is young, but it's producing free cash flow now, which is really good. The trailing 12 months, they produced $148 million of free cash flow. Let me remind you, these guys are less than $1 billion of market cap. So their yield to free cash flow on that revenue is up around 16, 17%, which is very, very good. So I like that about this company. When we look at the balance sheet looks good. Their debt's really low. They provide really good EBITDA. So the balance sheet checks out. The forecast, four analysts cover the stock. They all think the stock is discounted. That's a rarity. Sometimes you have some analysts that are just really bearish on a stock. They're basing it on a earnings per share of 49 cents in 2024, but really good growth in 25 and 26 to keep in mind. So I'll use these figures as well as the free cash flow I shared a minute ago, put that into my valuation to see what I think the company is worth. I value companies by looking at their free cash flows that I expect they're going to produce in the future, discounting those free cash flows to today's value using a discount rate. I also value companies by looking at their earnings per share. I blend the two valuations to arrive at what I think a fair price would be for a company, and then compare it to its current stock price to see if it's discounted or if it's being sold at a premium. Starting with cash flows, ProPetro has provided really nice cash flows over the last 12 months. So I'll use that as a starting point. I'll grow the free cash flows by 5%, and after year 4, they'll grow by 3%. I'm going to use a very high discount rate of 12% since it's a small business. It's also a cyclical business. And when I use that high discount rate, all those free cash flows I expect the company to produce have a value of $1.6 billion. I'm going to add the cash on the balance sheet, but take away debt to get to an equity value of 1.5 billion. The market cap's only 844 million. So if you look at cash flows and the value of those cash flows, I think that they're being discounted by 82%. Earnings per share gives us a different number. I'm going to be really conservative with this figure. It's 49 cents per share in the current year. I'm going to go with a PE of 12 and grow it by 10%, even though they expect that earnings per share are going to grow much faster. I'm just going to be really, really conservative. Using those conservative figures, I have a premium slightly of 20%. But when I blend the two and I put more weight in the free cash flow method, still yields a 48% discount, even though I'm using a 12% rate of return discount rate. So overall, this is a very discounted stock at a time when oil prices are down, but they're not going to stay down forever. If oil prices go up, I expect this stock's also going to go up. How desirable do I think the ProPetro business is? Well, let me take a look at it. I really like businesses that are very desirable, that have great moats, which are competitive barriers to keep competitors out and They are in industries that are growing and expanding. They have plenty of room to grow. They're very profitable and provide free cash flow. Now, ProPetro is not exactly in the green. They are mostly in the gray, with a slight amount of their company in the green. I'll explain why. So ProPetro does have plenty of competitors in the marketplace that will do the fracking services that they perform. This company is growing. As oil prices come down, they continue to grow. And that exhibits that oil companies really like this company, the services they provide. So it shows that they have some type of uh, competitiveness, value add, some unique uh, secrets of doing business and extracting oil better than their competitors, which is why they're growing. So I'm going to give them a little bit of an advantage there, but most of the business is in the gray. Considering that they are in the gray, there's a really good discount available on this company of 48%, and that's using a very high rate of return of 12%. So I'm going to be a buyer of ProPetro going forward and build up a position maybe of $5,000. There's a couple of reasons. One is oil is down, but it's not going to stay down forever. If oil goes up, this stock's going to rally. Two, I think small caps have been left behind. And as you can see, fundamentals look pretty good for small caps. They look really good for ProPetro. So I'd like to buy more small caps. I'm going to keep all my large caps. I'm going to keep all my stocks that have been performing great. But I have capital where I can put in $5,000 into this company, and it'll be a nice starting position in this small cap. So that's my video on ProPetro. Hope you found it interesting. Let me just remind you, I'm just an individual investor, just providing my experience, and I hope you found it interesting. I'm not recommending you buy, hold, or sell ProPetro. I'm not providing any financial advice. Thanks again for watching. Good luck investing in 2024.